want to pay 3% or do you want to pay 10%? Well, it's a pretty easy question. Hi, I'm Paul Morrow. You have a choice when you're doing Roth conversions, whether you want to stretch out this Roth conversion, you want to rip the Band-Aid off, do it all at once. Let me just tell you about the case that we just recently did, and it had a lot to do with IRMAA, Income-Related Medicare Adjustment. By the way, this is only for people over 65. If you're under 65 and not on Social Security, go ahead and do something else. You don't need to listen to this. If you're successful and you're affluent, in addition to paying high taxes, you pay a thing called an income-related Medicare charge up on your Part B. Now this stinks because it's really a hidden tax. And for this couple that we were working with, they each had, because of the income, a $536 Part B charge. It means that if you're a couple and you're 65 and you have good income, you both pay that. It's maybe $1,000 a month, $12,000 a year. But here's what they were trying to figure out. They were going to take their substantial IRA and do a conversion of that IRA over about a 6 or 7 year period rather than rip the Band-Aid off and do it 1 year. Income taxes are progressive. So let me remind you of two numbers. They're really simple. If you're a married couple filing jointly, if your income is essentially 400 to 500, you're in a 32% tax bracket. And if it goes from 500 to 800, you're in a 35% tax bracket. Now that's 3% on the difference, because remember, it's progressive. So let's just say that's 3% more on the difference between 5 and 8, which is 300 grand. You don't need to calculate for this. To go from that bracket to the 35% bracket would cost $9,000. $9,000 in 1 year. Let's say you don't rip off the Band-Aid and you don't convert $800,000 in 1 year, and you actually think you're going to save money by stretching this out over a number of years. If you're paying $12,000 a year for 5 years on IRMAA, that's $60,000. Would you rather pay $60,000 or $9,000? If you do have a substantial amount of income and you are paying IRMAA, keep in mind with IRMAA, there's a 2 year look back. So if you do a Roth conversion and you have a blast of income, or you sell your business or you sell your building in 2026, we know very well in 2028, they're going to catch up with you and they're going to charge you IRMAA that one time. After that, you're done. So do you want to stretch this thing out and pay IRMAA for 5 years, which really ends up costing you $60,000? That's an awful lot of extra money when, if you rip the Band-Aid off, get it all done all at once for a couple of reasons. Get the money into your Roth account, get it accumulating tax-free, all that stuff. You don't have to take any more required minimum distributions. You can leave all the money to your grandchildren, which I know a lot of you want to do. You can actually put it in trust without a 40%. There's a lot of great reasons to do it. But one of the best reasons is to kill the IRMAA off at once. Don't stretch it out. I think a lot of people do this break-even tax rate, calculation, BET, and all kinds of stuff. Yeah, it all sounds great until you add in the fact that you go 5 or 6 years of conversions at like 200 and something thousand a year, and you keep pushing out the end of IRMAA. So go ahead and subscribe to the channel. Share this with your friends. Send us comments and questions. If you want to have a 20-minute free Roth conversion coaching session, go ahead and sign up with us. Contact our team there. Click on the link in the caption below, or I think they have a little QR code, and I'll be happy to actually talk to you about your situation, see if we can help you. If you want to get referred to people that are associated with Smart Financial, we can do that too in all our different states. But what's most important is we help you get the best result for you and your family. Stopping IRMAA is just part of the art of being smart.